started. If you guys have any coins you want me to look at, start putting it in chat in about like 10-15 minutes. If you put it now, I might miss it. I'll let you guys know. You know how it goes. We look at Dixie first, USDT dominance, and then I'm not gonna spend as long today as I did last time. Last time it was only like a 3 hour something minute stream because I spent a lot of time going through these. Now you guys know how this works by now. I don't need to go in depth every week, so we'll just have a skim through the indicator charts.
Hey, how's it going with man?
Yo, what's up, bro? How you doing, man? You good?
Yeah, doing good, bro. Doing good.
Nice.
Kind of getting into the hang of things today.
Yeah.
Obviously, Monday range formed yesterday. Bullish start to the week, which is nice. So, yeah, just looking. I think we're gonna continue accumulating in this range, looking at like 96K as your key support, 98K as your resistance. We've just been chopping between this really.
Yeah. Yeah, bro. I think um the Fed is going to be grilled, right, by the US Congress as well, over the next 2 days. So I think that's
Yeah,
gonna
you
give some
got
chop.
Powell's gonna be testifying today, right?
Yeah.
Yeah.
So I think that's gonna be some chop. We just gotta see what he says. If he says anything bullish, then that's good for us.
Yeah,
Just
and
gotta
then
see
what
what
we
he
got
says.
we got CPI tomorrow, we got unemployment games on
Yeah.
Thursday, and then yeah, it's gonna be a busy week.
Yeah, bro. It's gonna be choppy. But it was a nice pump this morning. I woke up. This position's
Yeah,
very favorable.
nice pump if you were longing.
Yeah.
For sure, for sure.
Um, but yeah, okay. Let's take a look from the Dixie guys. I'll just do like I said. I'm not gonna spend as long as I did last week because nothing much has changed, right? We've just been going sideways. But I like to look at this at least once a week with you guys. So we look at the Dixie and then work our way up. So first and foremost, Dixie, you guys already know Dixie in terms of this perspective, right? As long as you're below this box, like we were talking about last week, it's going to be distributive, and you'd be looking for like breakdown from the white line and then break into the black line and then go towards range lows. If you're euphoric, you want to be euphoric, you want straight bullishness in the charts and nothing else. You want price action like this, right? Just straight up breakdowns on Dixie. We're probably not going to get a straight up breakdown yet, right? So don't be expecting that until you get some sort of change in market structure, which hasn't happened yet for the Dixie. If you want to look at it in any other ways, I can also show you different perspectives on it in terms of diagonals, right? So first and foremost, in terms of diagonals, take a look. Go to the weekly. Firstly, if you take a look at the macro, and by the macro I mean the last high to low, right? So that macro high to that low right over there. So your last macro high to low from not even last, sorry, but your last major macro high to low, the first one that's been on the chart. You take a look at the diagonals in terms of that. The reason we've been chopping in this area is because again you've hit deep value in terms of a retracement of that move down, right? So you've hit the deep 886s, and the other fib ratios, the honest common, but I like to use as well. You've hit the deep value, right? So if you can keep turning this to support, Dixie has legs to go higher. Okay, in terms of your higher time frame, absolute macro trend. If this very deep retracement level gets flipped to support, then all that's telling you is the downtrend projected from that move in 85 down towards 92, right? That projected downtrend, um, it's being overcome by the bulls basically, right? The buying pressure is such that the gradient of the downtrend is easily overcome. You'll be looking for high prices. But if the bulls don't manage to go and overcome this, then they've got very good reason around this area why this could be a potential, let's say, another lower high on the Dixie before we go and chop around some more. If you have a big rejection and go raid range lows, there's a good reason why, right? So it's pivotal that sellers take control here for us as bulls. Like, if you want risk on assets to just fly, it's pivotal that Dixie doesn't do this and start doing this. If this happens, I would expect Bitcoin to go much lower, maybe fill that 70k CME gap before we actually go higher. Right, so what I don't want to see is us progressing towards this level up over here on the higher time frame. We've got multiple different ways we can look at this though. So for example, if you then take a look at this fan, which is now from this peak to your macro low, right? So your macro high to your macro low. This area is also, this one you're already familiar with, the golden pocket, right? 66618. And just above you is the liquidity rate of the golden pocket in my own system, right? So one more pump up in Dixie, I wouldn't care ultimately as long as you did not go above this level right over here. Right, I would not want to see building above this level. So any moves up from here, wick to here, and then Kind of body closes below and then start just slowly selling off, distributing before going down. Is the kind of price action I'd want to see if we do go and tap this level. We go and go past the 886. Right, so in terms of diagonals, you can see we've got a very key area, right? Over time, we've got a very key area in this range already, right? We've got other things we can look at in this range as well. So we can take a look at the we can take a look at how there is. Hang on, there should be way more. There should be way more diagonals than this. Don't know where they've gone, but it's what it is. We can take a look at the pitch fans as well. So if I was to turn this on, the pitch fan from here to here, let's see if I do this and this, that's what we're looking for here. Yeah, we can leave that on. So this area here, locally speaking, another reason why you have topped out in this particular area is because if you were to look at this solely from a pitch fan perspective, what you've done is you've gone and hit the you've gone and hit the deep deep extension levels in this case, right? So this is your 1.764, 1.786 level. No matter how you look at it in terms of diagonals, they're all significant fib ratios that you've hit, right? So what you have overlaying in this area for the Dixie is just a massive cluster of different fib ratios from different points in time, right, which are all aligning in this area. So this is why Dixie in this area has been chopping for the last 2 years, right? Anytime you come up here, this has been the area we've been smacked down, but you haven't gone much lower. You've come back up and you're struggling at this area again. Is because you can see there is a lot of diagonals, and not just from one trend but from multiple different trends, multiple different uses of diagonal fibs, and multiple different ratios, right? Most importantly, so you have a lot of confluence in this area. This, you flip this area into support, Dixie has legs for much higher, right? But as long as you don't flip this area to support, now this is a very, very confluential area for Dixie to start distributing, grounding out, getting some liquidity rates perhaps, but ultimately closing below, distributing, and then going lower, right? So it's very pivotal what actually happens in this area for the Dixie. I had way more diagonals than that, diagonals for the uptrend as well. I don't know where they've gone, but it's all right. You guys get the picture anyway, right? So there's a lot of things going on in this area for the Dixie. So that's the Dixie USDT dominance. Let's take a look at what that's been doing. Again, since that fill of the mid, right, the projected area after the weekly close, right over here. This was your hang on, is this on the daily? Yeah, that's right here. So this area right here, this was put on last week's stream, right? So we had the major mid, and then we had this capitulation wick on the daily. I put this seller zone down, and I was telling you guys, if you want, if doesn't matter if Dixie USDT dominance does get a move up, as long as the mid is being used as resistance, right? That's what we're getting right now. The mid, we're creating another lower high right in this area. You want to see some sort of breakdown, like, deviate, basically break down and go back towards range lows is ideally what you see now. That's only going to happen if this area is lost, however, as support now, right? So you have the 6-month key level here, you have some multiple weekly key levels over here, 4.32%, 4.35 to 4.37%. As long as this area holds a support, USDT dominance could easily come here and create a new range, something like this, right, before going lower, which is not something you want to see. Of course, you want to see USDT dominance going back down if you want to be an ultra bull again, because as long as this stays above, that's going to be more chop on Bitcoin, right? This goes higher, Bitcoin's going to go lower, and also going to take a harder hit is what it is. So you want to see that.
Weatherman, could you sorry to interrupt, bro, could
Yeah,
you
of course,
send
bro.
your USDT dominance chart in the chat?
Yeah, sure, bro. Let's do it. Let's do the higher time frame one.
Yeah, lovely.
There we go.
Just want to see what levels you marked out, because I've got some preset levels marked out USDT dominance. I'm looking at like 4.77 major resistance. You got
Yeah,
4.36, 4.24, obviously lows of like 3.74, 3.8 kind of region.
yeah.
So yeah,
3.7 for me is major. Yeah, bro, for sure.
where it is right now, mid-range, right? Even with Bitcoin rejecting 98K,
Yeah,
just be careful opening new long positions, guys. Obviously,
yeah,
like Sunday and Monday was the ideal time for long. So risk appetite, it's more risky to open longs now. Wait for your support zone. Wait for a confirmation of market structure in your range to form. To be honest.
Yeah, you're 100% right, bro. Like Caleb said, look, you're coming back down to support now, right? So the long condition given last stream was you go and reject this now after this has already happened. So that's happened. Now you're coming back down towards support. If this flips, you could very easily, like I said, just do this, and any gains you make, any minor gains you might make on that move down is going to be given back straight away. Trust me. So yeah, just be very
Yeah.
careful. Risk to reward's not going to be worth it for many coins now.
It's really like for me, I know you're looking at others' dominance as well. I'm looking for a market structure shift on that to really be bullish.
Yeah,
'Cause right now, like we've had obviously that big pullback from the tariff war FUD, right? Which hasn't been cancelled. It was only delayed a month.
delayed. Yeah, yeah,
And then you've had, accumulation from retail, from institutions after the FUD to buy back the blood. But across the board for alts market structure overall is still bearish. So just keep that in mind, guys.
yeah. But yeah, that's USD dominance. Let's see if we do have anything on this chart for USDT dominance. No, I do not. I need to do some. Okay, so next let's look at this. You guys already know what this is. I'm not going to go over this yet. Nothing major happening on this one. We're looking at Bitcoin dominance. Bitcoin dominance, once again, rejecting from this area we had marked out. And why did we mark this area out? I forget. Yeah, just support resistance, right? So key support, resistance, 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 flip to support, support, back to resistance, back to support, back to resistance. You're at a very, very reactive area, right? So this is a zone for me where you can regard this entire area as one big support and resistance zone. So obviously, as long as sellers are taking control there now for Bitcoin dominance, expect your relief on alts, which is what we're getting, right, since that rejection. Should you then, just go back, claim this into support, claim this into support again, you always will be taking a hit on any, hiccup Bitcoin might have. And I wouldn't be surprised if this does have one more push higher, but you want to see some sort of structure break on this before you really cut for a Bitcoin dominance stop, right? So again, if you look at Bitcoin dominance in another light, lot of confluence on this one as well. So let's do this bit by bit. So first of all, again, 5 speed resistance fan in terms of your last high to current low, right? So your 2021 peak down to your 2022 low. 1 second, I have misplaced that severely. Let me do this. With diagonals, you've got to be very careful with the anchor point, guys, since it has an effect. It has a ripple over time, right? There you go. And then let me make sure that's anchored. Typically I'm going down to like the 1 minute to anchor these, but there you go. Okay, so the reason we've had this huge SFP here on Bitcoin dominance, and I don't know if we talked about this last week, but just in case we didn't, I forgot, I'll go over this again, is based on the current high to low, right, of the last completed cycle to the start of this cycle. Once again, we've hit deep extension levels, right? This is what you consider deep value. If you were, if this was a normal asset, this is where you'd be shorting, right? And if you flip the asset, this is the kind of areas where you'd be looking for longs, because once again you realize you've hit deep value, right? 88.6% discount. This is traditional deep value. So this is deep value to the upside. Therefore, if you now get some sort of another lower high on the weekly, right? So you put your weekly seller zone down, you get another lower high. You get what was once resistance has flipped back into resistance. You can start getting distributive structure building in this area. I think it's a very good area to actually consider perhaps Bitcoin dominance is topping out, right? Especially if you get a break of market structure following this SFP. But we don't have that yet, right? For all we know, this is a pullback to sort of retest this area. We're going to get more impulses up. So let's see, what else do we have in terms of confluence, right? So that's here. So let's just go bit by bit. First and foremost, again, from macro high to low, what we're interested in is this, right? So from macro high to low, you have flipped your last deep value zone, 786764, right? And looking at this, of course, many people who are inexperienced with diagonals would be terrified, because now you're thinking all of a sudden we have to go to a 72. That's not the case, right? Because of course we have other now more recent trends and more recent, still significant macro price action to consider as well. So it's all about confluence. But in terms of your absolute macro diagonals, right, if you were to just consider this, then yes, you'd be looking towards, as long as you're above this, you'd be looking to grind up towards like 72% Bitcoin dominance now, right? And of course, depending on how long you stay down here, the price target's going to change. So if you were to stay here till let's say April, and then you will get to have a pump up, that's going to be 71%. If you were to go within the next week, that's going to be 72, because diagonals don't stay fixed over time like horizontals do, right? But that's only in terms of if you look at this perspective. You have loads of perspective to consider on the actual Bitcoin dominance chart. So if you take a look at more, so next we're going to take a look at this, right? Of course, that is your last high to low, which we've already looked at, which gives us the actual wick we were just looking at, right? This one here. So there's this one too. We've got our macro. So let's turn those two off once. What else do we have, right? So in terms of an uptrend, this isn't in play yet per se because we don't know this is the top, but just in case this is the top, then these become support, right? So if you were to come back down towards this area without making a new high, this would be extremely key support to watch out to begin with. Remember what I said, guys, for fibs, many people get it wrong in the sense that you think all you have to do is put a fib retracement down, wait for the 618 to hit, right? Yes, you can do that, but that's not now a very let's say practical way of actually using fibs, right? If your trend is strong, for example, there's no way the 618 is going to hit, right? You want the shallow levels to get, 382, 34, these kind of levels. You want those to be holding if your trend is strong, right? You don't want deep value if your trend is strong because that's counterintuitive to what you're trying to say in the first place. If you're saying I want to enter this asset because I'm so bullish, it doesn't make sense your asset's getting a 61.8% discount. If your asset's truly bullish, buyers should be bidding that as soon as you get a 30-40% discount, so on and so forth. Right, so as long as if your trend is strong, as long as you're not breaking market structure, your trend is strong, your shallow retracement golden pockets, like those are the places to take your initial bids. Many people ignore those. Don't do that, right? Don't just wait for the 618 because it could take ages in terms of a macro perspective for a 618 to even hit. So, the other one I will consider is this one here now, right? So from your 2018 low to your 2020 high, right? If you take the uptrending one down, of course, we know you lost that uptrend, right? You literally bottomed out at your deep value, 94%, super deep value, high low at the 886, grinded at the 764, 786, rejected off the liquidity rate, back at the liquidity rate. So I'm going to turn this one off and turn this one on here, right? So now you can see we have another reason why we've been rejecting from this area. Rejection, rejection, resistance, resistance, right? If we cannot flip this to support, there's no reason to expect, again, those higher prices, right? So this is from your previous cycle. So then you throw all of this together. And there you go. Now we have a very good reason as to why did we reject here. In terms of both downtrending fibs and uptrending fibs, this is the area where both of those were intersecting, right? This is the area both of those, let's say, crossing over, meaning in terms of time, in terms of timing, and in terms of the most pivotal time for this to happen is this section, right? This is the only time, currently speaking, right, at this particular area, this is the only place in time where these are all going to be meeting up. For example, if you go towards August of 2025, let's say, right? Yes, you have this, but you'd be above this, now you'd be above this, these will no longer be resistance. So then you'd be looking towards levels like 68% or let's say, 70%, so on and so forth. All I'm doing is marking out the most pivotal confluential areas, right? But there's a strong reason as to why Bitcoin dominance is rejecting where we are. So all that to say, as long as we do not go and flip this into support, right? Very easy to actually visualize this. If you don't flip this to support, that is what. If you do flip this to support, then I'd expect by July, we get some sort of choppy, like really delayed reaction on the markets, delayed cycle. I'd expect somewhere around 68 to 70% to definitely hit. Right, as long as if you flip the support, I expect those to actually go and get hit. But if we don't do that, then I'm looking for some sort of, like I said, distributive structure to come in over here and for us to actually go lower. Now we do have two things I looked at yesterday as well. So just above us, right? If you can take a look, your one ray of hope for any wicks to the upside. This is the thing you're looking for now. Okay, on the 2 weeks, you have a 2-week mitigated. No, not sorry, mitigated. You have a 2-week bearish fair value gap. Right, high enough time frame for me to take it seriously, which you front run for now, right? And that 2-week bearish fair value gap currently does have confluence with a ABCD, right? Your ABC, there's your 618, so your 1.618 is basically lining up with the mid of that 2-week fair value gap. So for me, if you do get any wicks above this blue line in the future, basically I want us to see us reject from here, right? This is your one last saving grace. If that doesn't happen, then your 68 to like 71, 72% I think gets hit on Bitcoin dominance. So for me, this is that pivotal area to watch for right now, right? If you do get any more pumps up, the reaction at that 2-week fair value gap plus that ABCD structure, right? That for me, if we do get one more impulse up, I would hope that is the last one before we get some sort of distributed structure go in and then we go lower. But for now, this is only a projected area, right? Until price action confirms it, nothing's been confirmed. Right? I'm not saying this is the top. We'll see what happens once we get there, right? But for me, this is a this looks very very nice in terms of weight structure,
Yeah,
liquidity pockets, so on and so forth.
that's really nice. But you know the horizontal ray trend lines, it's like spider's web.
Yeah, it is. If you're not used to
But,
it, it can be too much for
yeah,
sure.
yeah. No,
But
but 100%, like I think overall, give it time, Bitcoin dominance, it will eventually reach that 70% range, right? Like
yeah,
68.
back towards range highs. Okay. So that's Bitcoin dominance. ETH dominance not really that useful yet, but it will be once Ethereum really takes the lead and we when we get that confirmation. So I'm not going to go over this yet. Let's look at total. Total
Capacity.
still holding right over here, um, above your previous all-time highs, above your ABCD 1.272, which is your reciprocal for the 786, right? Your 1.272. So, like I've been saying, nothing's changed on total, so I don't need to go over this any more than I did last week. All you need to know is as long as like again that mid white line there, that's the key one for me. As long as that's being held for now, there's no reason to expect lower on this, right? You know, the lows have been rated and it held. The logical thing now would be to expect a range, a rate of the highs. Right, so of course you can try and see what happens at the range mid, but ultimately I'd want to see the highs going get rated again. If you flip that into support, then of course we have this extremely confluential area up over here. Nothing's changed from last week, guys. So that's all I'm going to say on total one. You can see it's very self-explanatory. You flipped all-time highs into support still, right? The entire area denoting the all-time highs into support. As long as this is support, there's no reason to be looking for lower on total one. Right. So let's look at total two.
Sorry, what support was that for total you were looking at? 3 trillion?
Yeah, bro. So all-time highs is at 3.01, and then let's
Yeah.
see, the mid for this is around let's say 2.8, somewhere around there. Yeah, 2.8 trillion, and then the low is at 2.6 trillion for me. As long as that area holds, especially 2.8, I think we'd be just grinding higher again.
Yeah, makes sense.
So that's total. Total two below your 3-month seller zone still, right? So which is why ETH is struggling still a bit, right? You're still below key resistance. Again, why am I calling this a key resistance? If you go to the 3 months, right over here, right? So previously, 2024 January, um, 3 months. You can see for 6 months this was resistance, right? So for half of 2024, this was very strong resistance. For 2 quarters, and so far, right, you are below it. Right, so you're below it on the weekly. Now, ultimately, for me, this doesn't mean anything. Right, you've hit your range mid after you've lost it. You're below it. What's important is the coming up 3 month close. Right, if the 3 month manages to close above the mid of this 3 month seller zone, I think next quarter we start blasting back up to the upside on ETH. Because obviously, again, what was resistance for 2 straight quarters last year is going to have been flipped to support, right? There's your breakout, and this would be a successful retest if you close above, right? Yes, some people will not, some people get put off by the wick, but remember, a retest isn't uh, denoted by how low did you wick or how high did you wick. A successful retest is denoted by what is the reaction by the time the candle closed. That's the important thing, right? Wicks, you don't count the wicks for a retest, okay? So if we can close above, and again, let me try and see what the mid of this would be. The mid of this would be, let me give you a straight level, 1.24 trillion, right? For 1 month, 21 days time, and I know it's a bit far out, but it's because we're looking at on a quarterly basis, since we're looking at a quarterly level. If in 1 month and 21 days time you're above, let's say around 1.24 to 1.27 trillion, but at least a fine line in the sand, 1.24 trillion. As long as you're closing above that in 1 month and 21 days time, next quarter I'd be looking for higher prices on ETH, right? And the only way I'd be looking for lower is, let's say the quarter closed, and then when the next quarter opens, you start to get weekly breakdowns and back into resistance, and then you'd be like, okay, that's just bearish. Let's then look for short opportunities on ETH, right? If you aren't in any head shorts or something like this. But in 1 month, 21 days, as long as you have a 1.24 trillion, I'd be looking for moves back up on Ethereum to the upside. But let me leave that on for now, actually. You can see the reason we're rejecting off the area is because that is the mid of that 3 month seller zone like I was talking about, right? So there's a breakdown currently retesting and rejecting off here. If you can go and if you want to go higher on ETH specifically, you want to go and retest this. You want to reclaim the top half of this zone, right? So the 1.27 trillion to 1.24 trillion, first state of affairs, you want to go and reclaim that. After that, it's a bit nasty because above you've got yearly resistance as well. You've got 1.31 trillion, you've got 1.39 trillion like yearly resistance, but this in terms of market structure, right? If you did that, I think you start flipping this to support rather than going and rejecting off there, right? So for now, you'll understand is the area between 1.24 trillion and 1.27 trillion. Ideally, that is what you want to flip into support on total. So again, nothing much has changed on total too, right? It's still below, just like you were on last week. But you want this to be above, really, if you want Ethereum to start catching some strong bids. If you look at total 3, let's see what this is doing. Total 3, it's still a successful retest, right? On the monthly, on the weekly as well, that has been a successful retest. You closed above your 2021 level as well. Like I was talking about last week, I was saying if by the weekly close you can close above this, expect that move up towards this level, right, and then to your higher prices. So once you closed above that, you're now going towards your next key levels, front running it for now. But again, now everything is running back towards resistance, right? So like Caleb was just saying, now no matter how you look at it, whether you look at this in terms of USDT dominance, whether you look at this in terms of like total one, not in terms of total 1, but total 2, in terms of total 3, so on and so forth. Bitcoin clearly has room to run because total 1 has loads of room to run, but this total 2, total 3, there's more of an argument to be made why Bitcoin's going to catch bids again because these are still below their key yearly resistances. Right, so again, this is going to be strong resistance. You kind of need this to be flipped to support before you're looking for higher prices, right? Otherwise, you just go, you have 2 yearly levels. You wouldn't be surprised if it rejected here and then went back down towards the downside before going up. So again, if you're looking strictly at the total 3 chart and looking at this like a trade, this would be a no trade zone, right? Because I'd expect one more wick up to actually take those levels out, but your risk reward is going to be nowhere near going to be worth it in terms of a long, so you wouldn't do anything here, right? So even if you were to wait, that weekly close was the last time where you had the opportunity to try and take a play, right? When you saw that close and you saw a yearly level being reclaimed. But if you missed that, again, if you were to just look at this as an asset class to trade, you wouldn't be taking a trade here, right? You'd be waiting for that to take a trade, or you'd be waiting for a SFP or rejection to take a short. So this would be, if you're looking at total 3, in terms of just trade analysis, this would be a no trade zone. Right, so then you just extrapolate that and you realize, okay, well that just means that if I'm looking to enter any short-term trades on any altcoins, you got to make sure there's no altcoins that are sat just below resistance, just like this is, because if this rejects and goes down, you're also just going to be doing the exact same thing, right? But ultimately, on a macro perspective, if you look at the monthly, this is beautiful, right? There's your monthly breakout, there's your monthly retest, right? You had a monthly fair value gap right over here, right? Mid got tapped. There you go, perfect midfield of the monthly fair value gap. Your higher time frame key levels now, right? So on the weekly, you had your weekly order block. We had your weekly supply zone here. 2 mitigated bearish liquidity pockets flipped to support. That is extremely, extremely bullish on the higher time frame, right? So lower time frame perspective, you're sat just below resistance. Higher time frame perspective, that is a breakout and a successful retest so far. We have 17 days for that monthly candle to close, but this is looking good so far, right? So 17 days to confirm whether this monthly retest is going to be successful or not. So that's total 3. Again, a higher time frame perspective, this looks absolutely beautiful, right? Others, let's take a look. Still a range lows, rejecting off that midline, right? So 776 still hit. Again, as long as you're holding range lows, there you go, right? So as long as you're holding range lows, you're looking for moves back up towards the mid and the high. So you're not looking for any lower on this for now, right? The only way you'd be looking for lower is if you get the breakdown and then you start retesting this as resistance. Then 211.49 billion, and if you lose that as well, then literally all the way down towards 170, 155. That's the type of range you'd be going for. But as long as you're holding this for now, this is what I'll be looking for, back up towards the white box, right? Either flip that into support to go higher, or you're looking for SFPs of that area, like go up there, wick, and then make another lower high, so on and so forth, to try and head shorts on any alts that pump, right? But you don't do anything in this area here, because again, you've hit support, you bounced, you've not hit any key areas. If you look at this, this is sort of in the middle of nowhere now, right? So you got to wait for more key levels to get hit again before you can reach significant price action. Total DeFi. Bouncing, holding trend still. You still have your bats, right? There's your 8. It's not an 886, but like 0.005 of 8. That's basically an 886, right? So you've got a completed bat. If you look at this in terms of structure, right, your B points there, you definitely already hit your T1. I can just eyeballing this, you would have hit your T1 by now. So if you do get any sort of rejections here, right, you expect a type to return, and then type to retest. And then if you fail that type to retest, then yeah, you'd have lost structure on total DeFi as well. DeFi coins probably take a really big nasty hit, because then you'd be looking at this wick, this wick, this wick, this wick, all of these wicks to be targets to be taken out, right? So some sort of big raid before reclaiming and going higher eventually is what you'd be looking for. But as long as the trend is holding again, even if you do get one more dump, you'll be looking for a type 2 return on this, or perhaps a perfect 86 or something like this, basing around that PRZ and then going higher, right? So again, many of these now are areas where you just don't do anything. You don't do anything. They're a mid-range. You can see yearly level above you, yearly level below you, nothing where you currently are, right? This is in the middle of nowhere. It's a no trade zone. Others holding that key level, like I was saying, 886, 2.618, right? So again, just one indication on, okay, if you wanted just a very simple overview of should you hold your alts or not. Like I was saying, the overview is simple. If you go and you start turning this area to resistance, just cut all your alts, just cut them. There's no point holding them, right? Because this is going to correlate now with this being taken, probably this being taken, right? So you probably have a lower range to work towards, and once you get to key levels regarding that lower range, you can just get back in. Or if it just turn out to be a liquidity rate and you close above, even better, right? I'd rather you be safe and not hold a potential free fall, especially in alts, which are going to get decimated, right? Should Bitcoin take a dip, then you just hope and pray that it doesn't happen, right? So if you do start getting breakdowns from this area and this turns to resistance, honestly, just de-risk heavily on alts, right? Just across the board, just de-risk heavily, because should you go and reclaim this again, it's very easy to get back in, right? Alts aren't going to have changed price that much, right, between you closing down over here and then entering back over here. Because again, don't focus on these micro moves. Like ultimately, you want this to be support, so you can go and do something like this, and then take out these highs, the other targets for this big wave structure. That's what you're focusing on. I remember, especially for swings, it's not about pico bottoms and pico tops, entry and exits. It's about managing your portfolio and managing your average price on the coins you want to be in, such that you're not getting chopped out and losing 50% of your portfolio value before you actually get the move up, right? The main focus on swing trades should literally be, how do I maintain my current portfolio value to the best of my ability? That's it, right? And to do that, if you look at this chart, it's very simple. You lose this, you get out of any coins. I'd rather you be in USDT than hold some random vaporware that could evaporate like 40% in price in a 1 week candle, right? So below this level, be very careful. But easy trigger. If you do get below and you don't get much deeper, you don't raid any lows, you're just looking for that reclaim to get back in, right? But this would be a much better entry than trying to like snipe a quote unquote bottom without any structure, without any confirmation, right? That's just ego talk. In terms of structure, as long as you're above this, you have a logical reason. You have a very key area for a PRZ. Sorry, your very key area, a PRZ, to actually base your risk management around. Below this, until you go and make a new range, until you go and hit external targets, right, that are preset, you don't have anything, right? You don't know where this is going to bottom out. You don't know how deep you're going to raid. So very easy to manage risk management strategy for you guys on your alts right now. Look, if these get lost, just cut, right? You start turning this to resistance, just get out. But if this doesn't and it holds, eventually you're looking for that, right? So very simple. That areas where your risk management is super easy right now for altcoins. So if we take a look at this, what was I looking at? I was looking at this is total 3 against BTC. I was looking at this. So on total 3 against BTC, we have hit a wave structure again. Another one. Like I said, many things have hit deep 886s, right? This one went way past the 886, but I'm treating it like a bat for now. I couldn't see how to make it anything else. So I'm going to treat this like a bat for now. Your PRZ's held, right? The 886, the 2.618 of the bats in this area. You had a liquidity raid, and for me, this is why wicks are just nasty for harmonics, right? This is just a liquidity raid. Your actual structure, again, if this holds into support, you're confirming the PRZ here, right? So then you'd be looking for T1 and then T2, so on and so forth, on total 3 against Bitcoin. And this is a chart that's another chart you can look at if you're trying to time your alts, right? If total 3 against Bitcoin looks ready to break out, then that just means total 3 is going to outperform Bitcoin. Your alts are going to outperform Bitcoin, right? So this is an important chart to look at especially if you're trying to navigate your way around an alt heavy portfolio in the current market conditions, right? So another one of those charts for you to look at right now. But okay, let me check the chart now, because that's all the macro indications done. Like I said, I'm not going to spend too long on them. We're going to actual coins now, but let's just catch up with the chart one sec. ENA. What's up, Rohan, brother? How you doing, man? yeah, the diagonals definitely. It makes many people a bit. It puts many people off because they say it looks messy, right? But trust me when I say it's a very very powerful form of TA. Others dominance chart in chat. Yeah, of course, bro. Let me show you my others dominance chart in chat. There you go. Very simple. I can just do this and then send that in. There you go. ABCD. Is this on total? No, is this on total three against? Let me take a look. See, is it local? First and foremost, let's do this. 594, close enough to a 1.618. I'd go with this one. It's not a perfect 618, but it's close enough. Yeah. Yeah, bro. I had LTC in the harmonic setup video as well. I still have a swing on this one. Litecoin. The price action was very very good on this. We'll take a look at LTC in a minute, bro. Let's look at Bitcoin first, and then ETH, so on and so forth. So quick scans on these now. Nothing much has changed on Bitcoin, right? I actually don't need to do heavy analysis on this because looking at the index chart first and foremost, again, different perspectives, right? There you go. Let me make that invisible, not that one. This one here. Yeah, no, not that one. Jesus, one sec. This one here. Alright, so still within the diagonals that I was talking about last stream. Still chopping as long as this is support. Once again, you're looking to go back to the upside, right? So I'll turn the 0.5 on as well. So you're gonna have one key resistance level at 0.5 as long as this holds a support. But ultimately, you're looking for range highs to be taken again. On Bitcoin, you're still ranging. Otherwise, if I turn my 12-month levels on, you're still like you're holding the 12-month sellers on lower support. Therefore, your mid is the next target, right? You flip the mid into support. Your high is your next target for your yearly levels. On Bitcoin, nothing's changed since last week's stream, right? So we had these extremely low volume days, but again, if you take a look at what actually happened, right? If you go to the weekly, you never lost the level we were talking about last time, right? Which is that previous weekly buyer zone. You never lost that area, right? So all that was happening, sure, but at the end of the day, the area where buyers took control the week before was never lost, right? So then, as long as you don't close below this level, you're not surprised if you do get moves back to the upside. So again, now you're breaking out of it. You have a new weekly buyer zone to contend with, right? That weekly buyer zone being that huge capitulation wick. So if you do get any breakdowns, your key supports again going to be around between 92,466.28 to 93,925 basically, right? And of course, these levels might vary depending on what chart you're looking at, right? So different exchanges are going to have slightly different prices. I'm using the index chart, but any pullbacks, again, you want this area to hold, right? You hold this area, you're looking to go back higher, right? Raid and reclaim. But now, should you go and let's say turn this area into resistance, right, or go up wick lower high and start distributing at this area, that's going to be a nice zone like we were talking about last time for you to try and take head shorts on Bitcoin, right? Because perhaps we get one big raid before we actually go higher. This is creating a very nice range where neither side has really been taken out yet. That's something to consider. They love to take one side out, maybe both sides out, before you actually get a conclusion of the range. That's typical price action, right? So I don't think the fuckery is over yet, but as long as we're holding this at the end of the day, that's just speculation. So, but yeah, Bitcoin, again, 100,876, that's going to be a resistance anytime you're above 93,466, especially when you're above all three of these diagonals. You have a zone around between 101, 100, 832, and then 100 to 700 something, right? That is the level we were looking at. That is the level to watch for. This here, if you guys are remembering, if I take this back once to Tuesday 4th. Hang on. If I do this, and then I'll go on to the 1 hour. This was a short that I gave in on stream last week, if you guys remember this one here. So we were watching this, and then I was saying if you do get a rejection from this area here at a box over here, it's going to be in the YouTube video from last week, but that short did fill, right? This one over here, because we had a supply zone right over here. You had a bearish fair value gap on the lower time frame. You had a supply zone. You had a yearly level just above you. So this was a short we were talking about on last week's stream. And this did eventually fill. So we had the pump up chop, and then we filled, and then we went back lower. So that's the only, that and my Trump short is the only two hedges I'm in currently. Taking some profits on this, but I've not closed it fully. I look for opportunity to size up should the downtrend continue. But that's BTC, nothing else to say, like nothing's happened, right? You're still ranging sideways. So let's look at Ethereum next. ETH, there we go. Now ETH is looking nasty in the sense that whereas BTC held its 2nd of February 2025 wick, and just that's why it's trading above, you can see Ethereum didn't hold it, right? It's back below that level again. So as long as you're below this, the target for me on ETH still is going to be either 2,503 to 2,496 first, right? Either I would take...
What am I? What's up?
Yo, what's up, brother?
You're still on replay mode, so you're like behind, I think 5 or 6 days.
Oh my God, yes, of course. There we go. Forgot about that.
A bit more data to work with.
Yeah. There we go. Sorry guys, forgot about that. Yeah, so again, you broke down, right? The point still stands, even though it's a bit weak right now on ETH. So you could turn that into resistance, right? There you go. You front run this level for now. So until you reclaim this, I won't be longing anything on ETH, right? At least I want to see 2749 get flipped to support. If you flip that into support, you know, you just wait for that retest candle to come in. You put your stop loss below the retest wick low. You enter on the confirmation, right? That's it. But if you do turn this into resistance, I'm still eyeing this level as a potential area to wick down into once before going higher. If you do lose this, once again, straight back towards this mid is what I'm looking for on Ethereum. On the higher time frame, again, Ethereum looks fine. Okay, as long as you're holding 2030 to 2282, Ethereum is going to be fine. This is your higher time frame, significant level of significance. This key inflection area right over here. As long as you're holding this, you're going to be fine. But now, locally speaking, right, if you do want to entry, maybe if you don't, let's say this is the area where I'll be taking scalp to swing mindset trades, and then this is the area where, you know, any successful raids and closes above, you don't even need to scalp, you just be looking at swing mindset trades, right? So because that's going to be very, very reactive, very key area. We could have a raid if everything goes to shit, because again, this is now a new range, right? Wouldn't be surprised to see a raid of range lows, reclaim, and then higher. But again, those are just price action like that for me is just speculation until it happens, right? You can not trade and wait for that raid, but if you don't get the raid and you get this first, you're going to be pissed at yourself for not taking the risk. That's an area where it makes complete sense to do so. So for now on Ethereum, if this turns into a lower high over here somewhere, I'll be looking for this level here, and then either reclaim this to enter a trade back to the upside if you do raid it, or if you just straight up lose this and turn this to resistance, then on the lower time frame, then you look for scalp shorts back down towards 2282 down to 2008, 2030. That's the zone you're looking for on Ethereum. Delete that. There we go. But you can see nothing much has changed from last week, guys. It's pretty much the same. Right, we're still talking about what happened last week, still the same. We closed below on ETH, that's it. It looks very weak, very, very weak. Solana, if we take a look now, Solana on the other hand closed above. Oh geez, one second, there we go. Let me get rid of this. Solana closed above its 2024 12-month seller zone low, right? And this previous week, that again 5th of February 25, that week again, that week flipping the mid into support, right? So that's all. Solana looks fine in my opinion. On the lower time frame, you don't want to lose 197.97, turn that into resistance. If you do that, you'll be looking back towards 188 sold again. You don't enter a trade right here on the lower time frame. If you want to long this now, you wait for a flip of 203.41. Right? If you flip down on the lower time frame, I'm talking 3 minutes, 15 minutes. You can try and take scalp trades on Sol up towards 215, but as long as you're below this now, there's no point being in a long, right? Just look for that lower time frame flip to support before you actually look for scalp to swing trades here, because you swing risk to reward isn't going to be worth it, right? Because you've got yearly levels right above you now. So any trade you take is going to be lower time frame based trade, not higher time frame trade. But you know, that key level now for you right now is 203.41. That's the level you need to flip into support to take a scalp back up towards 215 to 226. Otherwise, pull back towards 197.97. That level needs to hold. If you don't hold that back towards this area, you go on the lower time frame, right? This is what it looks like on the lower time frame. It's just if I go to the 15 minutes for this actually, right, it's just been ranging around those key levels, just like that. Yeah, so you went support, right? Support, and that every time you flip this into support, you're getting those moves up, right? And then every time you flip the next key level into support, moves up, so on and so forth, right? So that's exactly what you're looking for, either structure or just straight up candles telling you, yes, this is successful, buyers are stepping in. You just take a high risk to reward trade based off that. You don't take in a trade because you think, oh, it's definitely going to go up from here. You're taking a trade because risk to reward makes complete sense to the upside at these areas, right? Your invalidation is going to be below these local wicks every single time they come on. So it's hardly any risk to yourself, even though you're not going to be getting a big percentage move, because your risk to reward is so tight. You can size up on the trade, therefore you can still make nice money on the trade, right? That's the idea. But that's Solana. Again, 886 has hit for Solana. Just in case no one realized, there is a completed wave structure here, right? XAB, that's a 0.5. C, basically a 618 and a D, 886, right? So as long as we don't go and violate this level completely, that wave structure I'll be looking to, even if you play it fully, that's back towards like, $200 sold, sorry, right? So that's Solana. Apart from this, like, some coins that are looking nasty is coins like Vanry, right? So I still have my 30% allocation on spot on this. 70% is still to size up. Only going to size up again once like signs of strength start coming in. Otherwise, I'm green on my 30%. If you literally start struggling to get above, I'll just close that 30% in profit and just be done with this coin until signs of strength come in, right? Injective, same thing with Injective, right? We're getting a move back up, sure, and this is going to be based on fixed volume profile. So let me go on this chart instead. We're holding your 2024 12-month buy zone low on Injective, right? As long as you hold this, at the end of the day, again, you're going to be targeting higher prices. And for me right now, this is going to be your weekly buy-seller zone right there. So this, you have a big resistance coming up above you on Injective. You can see that just by the structure, literally like major support here below that, right? So this is of course going to be big resistance. The only way now, if you're not in Injective right now, don't do anything, don't enter, wait for this. If that happens, go in on Inj. You're looking to play this entire range back again, right? A lot of range to be played. Below this, just understand you are below range. Okay, so for me, if I do see signs of weakness here, the Injective plays that I did get into during that capitulation, I will close. Okay, because there's no point in me holding this if Injective literally showing me it's not willing to be accepted back into support right now. So I'll just take profits and just go risk free, right? And just size back up or enter back in should we ever reclaim that level back into support. But Injective has a lot of yearly levels in this particular area, just giving it support when we were above it, which is why Injective was looking so good, right? Back when I gave that September entry, of course, you had the local wave structures, you had the actual market structure, the price action, everything was so bullish. Cumulative, like you have smiley faces, for example, right? Everything was so nice, and you got a nice reaction off it. But then you got back towards your next yearly levels, and then you just died. Front running that, you just straight up died, right? Is what it is. So that extremely amazing area, right? That was once such beautiful area for all those beautiful bullish structure to come in, has been lost, right? Now, don't take that lightly. Until this is reclaimed, this is resistance now. Okay, so if we cannot get above this and we ever lose $13 at some point, honestly, I'd be expecting around $10, $9 Injective, which would be amazing. Like, I'd love to get that level. Who knows? You're below your 886, right? The entire wave structure's collapsed. You have other wave structures as well, of course, right? So for example, there's this potential shock that could hit. But we're not going to talk about this yet because that's going to warrant you losing more yearly levels, right? So we're not going to talk about this yet. But, just saying, be careful. As long as you're below this, just be very, very wary of Injective, okay? Set your alerts, be aggressive with your profits until you flip that into support. Lower time frame to higher time frame mindset here. In terms of basically a scalp to swing mindset. And once you flip these back into support, then you start going more towards a swing mindset. Because once you accept these lows, yeah, range highs again, right? You're trying to play that move up, so it's swinging. But as long as you're below that level now, you're not looking for that big percentage move up, because you have tiny percentage moves that take you straight to massive resistance. So any sort of play you get here originally is going to be lower time frame trades, because you could chop at these yearly levels, and once you get a clean breakout and some clean higher time frame retest of that area, right? And by higher time frame, I don't mean weekly or so. So for example, you could get an hourly 4-hour breakout and like an hourly 4-hour retest, right? That's going to be good, right? If as long as you're successful, then you start switching towards a swing mindset, because as long as you're above this, you're looking for those range highs again on an injective. Aptos, again, you do have a completed wave structure in Aptos. You have your bat and your shark, 886s both lining up here. There's your shark, there's your bat. But same thing, you're below your 2023 and 2024 yearly levels, right? You've gone up there and you've rejected on the dot twice now off that 2023 yearly level, right? If you were to take a look, you can see just straight up highs, right? Just straight rejection again off that yearly level. On a yearly level, again, I'm not putting these levels on to try and fit data. This is data you could got from 2023, right? So you're just rejecting off a significant level, that is all. If you go to the weekly, let's see, we have our weekly, the 5th of February weekly buy zone. Sorry, this is the 27th of January 2025 weekly buy zone. That's what you're chopping within right now. Below that, you're going to have this buy zone to contend with. Okay, so if you ever lose this level over here on the lower time frame now, everything I'm talking about right now is lower time frame, because the higher time frame analysis should be, it's very simple. You get above this level for your swing mindset play, right, back up towards $8 and $9, right? But below this level, you know, you have one zone between 584 to 590, that's strong support. If you lose that, then I'll be looking at the 86 and the 2 to 86s individually, right? This zone is going to be your PRZ, of course. You don't want to lose that. If you lose that, that is when 525 comes into play, and this is something you do not want to lose, okay? Because at this point, you still maintain a general structure, right? That's 0.5, and that's the most recent data that's not been tested. Below this, general structure is once again lost. I'll be looking back towards $4.32, honestly. Either give me $4.32, or I'm not interested in holding any Aptos until these levels start to be reclaimed. But mini coins, again, once again, this pump has taken it straight to resistance, and they're not able to overcome set resistance. Okay, so just to be very, very wary of that. There's no point opening any longs when your candle's looking like this. You miss the local move up, you reject it, and then you're opening a long. Doesn't really make sense, right? So wait for key levels to hit and for structure to tell you it's okay. How would you long Aptos now? Two options: lower time frame, either 6.158 gates flip to support, and you're looking for a lower time frame scalp from there to $6.40 to $6.52 area, right? Or you go and $6 itself gets you have a successful retest of $6. You have a retest wick low, confirmation opens above, so then you open a long at the confirmation, put your stop loss below that retest wick low to try and target 615 and back towards this range highs ultimately. That's the two ways you can trade Aptos right now on the lower time frame, right? Otherwise, there's no point doing this, because on the higher time frame you're rejecting off your resistance, so might as well just be very patient at this current area. AVAX. Again, AVAX 886s have been hit, absolutely amazing, right? Of course, you have your ABCD. So if I click on the ABCD, you have your ABC. As long as this level base is, your D is around $60, right? $60.25. You have your XABC 786. So then the butterfly I'm looking at would take you towards $78, right? Just local wave structure. So very beautiful on AVAX, right? In terms of general structure as well, we can see this is extremely important support resistance zone. You have a weekly bullish order block that you're trying to maintain currently in that area as well. So for me, what else do you have in this level, right? Apart from your deep retracements, you have your ABCD, right? Your 0.5, 2.0 extension. So you can see how pivotal this area here is on AVAX. It doesn't matter if you look at it in terms of market structure, or you look at it in terms of wave structure. You look at it in terms of just key support resistance. Doesn't matter how you look at it, it's a very important level to hold, right? So we can chop it on the higher time frame, right? It doesn't matter. You don't have the bottom tick entry here, but building a position here on AVAX just makes sense to me, right? Because if you do bottom around here, you have massive upside potential on AVAX. And remember, for me, this entire wave structure that's happening currently since the 18th of March 2024 is still part of an ongoing type 2 retest of your macro wave structure here, right? So this XABCD there, for me, this is still a type 2, right? This is a part of the type 2 retest. So if that's successful, we go towards the type 2 T2 target, and then higher on the macro wave structure on AVAX. On the AVAX, yeah, I think this one looks really, really good. And by it looks good, I mean it's a very good areas, right? Not much needs to be said. Same as last week, basically, right? So same as last week, which is this is why last week I said AVAX is one of the few alts that I built a position on during that capitulation week. I'm not going heavy into alts. Like by that I mean I'm not going to go to have 20 different alts in my port, right? I'm just sizing up on a few select ones. I don't think like I was talking to someone else. Well, I was replied to someone. Someone else was saying like on the server they were saying like expecting alts to just have an insane rally at some point and go to highs, but I think that's a dangerous train of thought in the sense I think many alts don't go to their old highs. Okay, I think you have to be very, very selective of what alts you do put your money into. Right, I don't think you can't just. It's not 2021. You can't just like blindfold yourself. Just have a load of cryptos up on a dartboard. Just throw some darts and just buy wherever it lands. If you did that in 2021, you were making money, no question about it. But this cycle, I think I think very select alts are going to get some nice moves up. But I think many alts are going to be extremely underwhelming compared to last cycle. We're way too diluted even compared to last cycle. I think we've gone from what? I think last cycle we had around 18,000. Coins, if I'm not mistaken, right? I could be mistaken, but I think we're at around 18,000 cryptos, and we've gone to what, like crazy, like we've gone into the millions of how many different just Web3 scams there are now. I talk about dilution. You just can't expect the same type of movement on the markets when you have that much crazy dilution going on. So you have to be very selective. Right? You got to be TA is going to be just as important as like fundamental analysis, in my opinion, basically, right? Fundamental understanding of why would this project have a good narrative to take it to high market caps, right? Why would this project be important? Why should I get in this project? It's not just going to be TA anymore, right? I think fundamental analysis is also going to be important. The ability to actually discern why someone might be interested in a particular project. Say again, another one that he hit deep 886s, but is currently treating that area as resistance. Right, so just nasty work on Say so far. You want to flip this area to support ASAP for obvious reasons. If you don't, let's say you get a whip up, one more wick up and you start SFPing, you can try and take shorts based off that, right? Straight back down towards this level, honestly, on Say. Because as long as this is resistance, you're not going to be going higher, you're at resistance. And your next support is that 2024 12-month buy zone low. But that's it. Very simple right now. Nothing to be said. You forget that flip, add. Otherwise, just don't add. Very simple, right? Just keep it simple. Sui didn't hit the 886. Is what it is. This is what you want to see, right? Look, you go to the weekly, your weekly buy zone, right there from January. Look, you're way above it, right? So this is good because let's say the weekly does close like this, going into next week. If you do have a pullback, now you're going into support rather than resistance, right? So then SWI has a much higher chance of actually basing and then bouncing back up. If the weekly was to close like this on Say, then what's going to happen next week? You're going to have to overcome this first to get higher. And if currently I literally think of market participants like I would of electricity, right? It's like how if you think of it in terms of electricity, it's like a current likes to take the path of least resistance, right? That's the way I start to think about traders now. Why would you get into this when you could trade SWI, right? In that situation, because you have way more resistance above you. The path of least resistance would just be forget about Say. I'm just going to go into SWI and enter on a pullback, right? So this is the kind of chart you want to see, right? Yeah, Say very underwhelming right now. Get that flip, it's going to be nice, right? This general area, especially on the higher time frame, because then you don't have much resistance, right? You're looking straight back up towards 63 cents if you can get above this big zone here. But locally speaking, before we even talk about that zone, this is the area that's resistance that you need to flip into support. But yeah, SWI looks amazing. Of course, now, why have I got this marked as an 886? I do not know. Perhaps a lower time frame harmonic. Yeah, I think it was something like this. We've lost that, but it was a more local harmonic there. We can forget about that for now, I think, because this is very deep and based around below as well. So forget about that BAT 886 for now. This one here. This is the one I'm looking at. And why have I got this on? No idea. This is what I'll be looking for on SWI. Okay, your next key area is right over here. Okay. Same reason why you rejected over here, of course. There you go. So you have your macro read on your seller zone right over here, right? And you have your seller zone right over there. So your macro read plus your normal seller zone. So those two 0.5s, right, those are going to be resistance on SWE until proven otherwise. If you do raid this zone that we've got marked down, right, reject here, this is the area you want flipping into support, okay, in the future before you go higher. Otherwise, you know, if you do reject from this area, it's a logical area for you to, for it to reject. In terms of just market structure, we can see it is support resistance. And now in terms of your weekly, right, this is the area where sellers were active, right? Depending on two different perspectives on this weekly candle, this is the mid of one, this is the mid of the other. Sellers were active here, so if sellers are once again showing strength, then you'd be looking for some sort of pullback, right? Maybe towards 319 again, base around and then go higher. But ultimately on SWE, what you don't want to see is distributive structure coming in. Again, if you do go back up here, and then you start SFPing at this area, right, and closing below, you will have an upside down smiley face. That's distributive structure for me. I'd be looking to hedge a short on SWE here, even if I do, like, you know, my spot SWE bag, so on and so forth. I'll be looking to hedge a short and maybe take this down towards the 886 finally, down towards $2 on SWE. So that's the price action I'll be looking for. So one sec, let me do, there's a few more coins I want to go over. Ondo, Hype, so on and so forth, and I'll catch up with the chat. Ondo, very, very, very strong. There was some very good news released for this the other day, right, about a partnership. But in terms of, again, key levels, 2024 6-month level got tapped, and you've had a reaction off it. But now you're just going sideways, right? Again, what you don't want to see is distributive structure. And for me, distributive structure on the macro looks like this. You have initial resistance. You have a, if this confirms to be resistance again, this is going to be deviation basically, right? Massive raid on liquidity / deviation, reconfirmation of resistance. Again, if that were to happen, right, and you were to on the higher time frame on the weekly start to SFP this area and keep closing below and lose $1.34, I'd want to be seeing that 886 on Ondo before we go higher. 70 cents Ondo, right? So this PRZ on Ondo, you have your shark, you have your bat, and you have an ABCD 2.618. So massive PRZ in this general area on Ondo, right over here, right? 73 to 79 cents sort of area. So if you do distribute in this area, right, that's upside down smiley face comes in. You guys know the structure by now. I'm going to be hedging a short, and I'm going to be trying to ride that short down towards that PRZ level where you have the 2.618 and the 2886s. Okay, but if you don't, you know, and you just go and flip this into support, you no longer have distributive structure. So then you just be looking for higher prices again. I'd be looking for move up towards 174, 1.74, sorry, and then 2.14 again. But that's Ondo. So Ondo. I know I'm going through this a bit quick, but not much has changed since last week, right, guys? So I don't want to, like, you know, make you guys just sit through the exact same TA over and over again. Nothing much has changed. Just giving you the updated, like, you know, levels and stuff. Hype, so much chop on this, up and down. At the end of the day on Hype, as long as you are above $24.06, your next target is going to be $29.79, right? So on the daily, again, we're attempting a breakout. Let's go on the weekly. What do we have? Let me get rid of some of this actually. Right? Let me get rid of the ABCD, or rather just make it invisible for now. Let me get rid of. Why have I got this marked down? Okay, it was a previous high at some point, so I can get rid of this. Get rid of this. There we go. This used to be a weekly. No, I'll get rid of that too, and then go back to the daily. Get rid of this. Okay, so on Hype, what would I be looking for? Let's take a look. Weekly does not going to give us much apparently. 3 days, yep, there we go. This is what I'll be looking for on Hype. Okay, if you cannot get back above this zone and you keep rejecting this again, you have 3-day distributive structure going on. Okay, and I'll be looking to hedge my spot Hype, my swing long on Hype with that short to try and take it back down towards this level. But the most important thing here is going to be on the daily. We are now attempting a breakout, right? If on the next day, or, you know, after this daily candle closes, what you'll be looking for is now a daily candle which gives you the retest. So it doesn't matter if you don't get the retest straight away, but ultimately you're looking for that pullback down towards $24.06, and you're looking for that retest to be successful. You can drop down the time frames. You can go into the, if you're looking at daily price action, you can look at the 1 hour to the 4 hours for entry models, but you're looking for a flip of this level to actually build your long position, right? If you're not in already, and that is simply because look, this is your 2024 seller zone low. The area when 2024 closed, this was the area where below the area where sellers were in control. So this is the first area buyers need to take control of. So if you do see buyers attempting to take control, you take the long. You go with the side that's showing an edge. You can see locally, this is what I'm talking about, right? How would you enter? You wait for the breakout, you wait for a retest candle, right? Your retest candle occurs, something like this, right? There was your retest candle right over there. So in moments like this, right, how would you have entered? You'd open along at the confirmation candle and put your stop loss below structure. So you look to the left, right? You've had chop below, for example, this area before. So what you do, you account for, okay, historically speaking, how far have we chopped, right? And for me, this is, I'd be happy taking a risk around this wide, let's say, right? And then you're looking for a target. So for me, minimum risk to reward of 3, and just the top of that makes sense because that is now the low of the area where we're looking for distribution. If sellers step in, take some profits here. Otherwise, ultimately, for me, the mid of the zone is always going to be the most important. So I'll be running it to the mid, right? So I'm not in this trade because I'm in from lower. But if you were looking for a trade, and this is what I'll be looking for, and this is also why I don't give preset P&L cards. When people ask me why don't I give these type of trades where I have this on more often, it's because every time I enter a trade, right, and those of you that have been in Unity for a long time will be familiar about this fact about me by now. I'm looking for these type of candles to come in, right? Until they come in, I don't know where the low is going to be, right? Once a low does come in, the retest happens and lows do come in, then you have a area which you can manage a risk around, right? But if I was to give you a blind stop loss, for me it doesn't make sense because I'm giving you a stop based on just where do I think price is not going to go, right? Once prices actually already happen, it's going to be much easier, which is why I wait for confirmation before I take a trade, which is why every time I do talk about plays on stream, I'm not giving you a random stop loss like, oh yeah, we need to lose this, right? That's those of people give stop losses based on structure, and there's nothing wrong with that, right? That's just not my particular trading style. That's the only point I'm trying to make. I'm not here to shit on anyone who does it like this, okay? Don't take me the wrong way. This is perfectly fine, right? If you have a trade strategy based around that, right? For me, it's all about I size up, right? I take less trades, especially if I'm on scalping. Obviously, I'm taking like regular lots of trades. Even when I'm scalping, I'm taking very tight RRs, right? And those of you, those particularly my students in this server right now or in this call even, they'll be very familiar with this. But I'm looking for very strict and high RR trades because I love to size up on my trades. So I'm not going to enter a trade if I'm only going to be putting 1% of my ports in it. There's absolutely zero point in me doing that. I like to go in, I like to risk a decent size on my port because I want to enter at an area where risk to reward makes the most sense, right? So by risk a decent size of my port, I mean I'm going to be entering with a high, like let's say people enter 1%, I'm entering with like 10-15% of my portfolio, right? So for me, just high risk to reward is what I'm always looking for, right? And for me, like putting blind stops like that based on previous structure runs too high of a probability of just getting ran through, right? Because there's no local confirmation actually confirming my entry thesis yet. Which is why I don't put these offer normally. But once price action like this has come in, right, like once you do get the breakout and you'd be seeing that retest, then you have the area, okay, you have your key level, buyers have validated the key level, and if so therefore it's okay for me to be in a trade, and more importantly, around that key level I have I have previous price action which allows me to put a logical stop loss, right? Very logical stop loss. So then if you get stopped out, you get stopped out, is what it is, right? But you did everything in your power to mitigate your risk and enter based on what you see in terms of price action, so on and so forth. So then if you get stopped out after taking a trade like that, you can't be sad or you can't be mad about it, right? Like it's just timing was off. You're not going to be right 100% of the time, but price action for me is the biggest thing. So but yeah, you'd be looking for, this daily candle still ongoing, right? So this isn't a breakout retest on the daily. So I'd be waiting for this daily to close and then for another daily candle to come down and actually confirm this structure. That'd be your high confidence entry on hype. Otherwise, if by the time the next daily candle comes or even by the time the daily closes, you're back below this again, you're going to be looking for head shorts on this. Okay, you're going to be looking for head shorts. That's hype. Let's look at Trump next. What I'm watching this particular area on Trump. So that breakaway gap we were talking about, right? We were talking about this last stream that got filled, right over here. The breakaway gap is $15.88, right? So the gap that was the breakaway got filled. You rated it, right? You hit your if I go to the daily, right? You take your macro read of your, so basically take the total area where buyers are in control of this candle. Then you'll also realize that you hit the macro read of that daily candle. Therefore, as long as this box is holding, right, on Trump, this area between $15.88 to $14.96, right? As long as this is holding, you're looking for higher prices. I think eventually this reprices higher because you've hit your deep, you've hit deep levels, you've hit key areas more importantly. And buyers for now are attempting to take control. So, like I said, as long as this holds, you're looking for higher prices on Trump. If you then start turning, let's say, 1588 into resistance again, right, so you can literally do this on lower time frame, you can do this on the higher, it doesn't matter. I'll do this on 15 to the hourly if you're looking for intraday, right? Just looking for that breakdown, failure to get above, right? Local distributive structure to come in, so on and so forth. You're building a short position over that. Your first TP is of course going to be 1496, right? Based on price action. If buyers don't step in whatsoever, there's no point TPing here until either the reclaim. If you reclaim, you TP. Otherwise, you don't need to TP. You're going to go lower, right? And ultimately, if you do lose this zone, however, right, the actual entry for me on Trump that I size up heavily on, based on price action again, if buyers confirm the low, is going to be the 886. Right, so if you take a look, you go into the 1 hour, the macro X AB, that right there is a 0.5, right? And then you have the C right there, and then the D886 is going to be right over there. So $10, around $10.22. That'd be my next level if this white box is lost on Trump. Let's look at Dogecoin. Dogecoin again, beautiful. You've got your flip of resistance into support. That's all this has been, right? You broke out. Here's your successful retest. And it's been a successful retest so far. In terms of key levels, 31 cents is your next key level, right? So 31 cents is your next key level. If you go to the weekly, you can manage your trade entries around this based on this. So here's your previous weekly candle, but I'd be doing this now, okay? I'm only going to be, I'd only recommend longing Doge now, either if you get any sort of pullback back towards 25 cents and buy a step in, or you're looking for a flip of 27 cents into support. Okay, you're looking for this and this. So you get a daily close above, or even on the hourly if you want to be proactive, you're looking for just the hourly close above, and then lower time frame wise, looking for that retest on the hourly, and then you again based on the retest wick low. After the retest comes in and the confirmation open screen, you're going to put your stop loss based on the area around the retest wick low slash where else has you've gone in the past, right? So for example, if you did get this scenario, the logical way to put the stops would be for me below this, something like this, right? And then you're running this up towards here. But this is completely price action based, right? So you're gonna have to wait to see what kind of retest candle do you get first. But this is the only way I'd recommend long in Doge right now, right? Otherwise, I wouldn't touch Doge where we currently are, middle of nowhere. 27 cents is your next key area. Flip that, you're running towards 29. Flip that, your main target 31 cents, your yearly level again. 2024, 12-month seller zone low, right? Very simple on this one. So this one has room at least, right? Above 27 cents, this one has room to at least go towards its next target. So those just one to keep on your radar. Just set an alert around this level. If it flips, just get in, right? A successful flip. If you enter lower time frame, definitely take some profits at 29 cents, right? This is going to be an area. So if you're looking at hourly price action, it's going to be 3-minute to 5-minute entry models, but just enter on the hourly anyway. The main entry trigger is going to be your risk to reward, right? If the retest candle gives you a stupid wick, I wouldn't enter, okay? Because your risk to reward is going to be completely screwed. Just you want a really nice retest candle that allows for a good risk to reward up towards 31 cents. That's the way. That's the entry trigger. That's the entry condition for the Doge. And last but not least, PAL, right? So my AI play right over here. Again, it's hit the deep. It's not hit this 886, right? But it's hit at 872, close enough to an 886. And again, currently is holding that daily slash weekly buy zone. Again, for PAL, right? Any pullbacks towards 16 cents now, right? Especially after especially on the daily or something like this, right? Where you get the daily close above. Any pullbacks towards this area, buy stepping in. You can start to build your position slowly if you're not in this, right? Because if you lose that, you just cut your position, right? But the reason I like PAL, because again, wave structure wise, macro 886 has been hit. You have an AMD PO3 model. Here's your accumulation. There. Here's your accumulation. There's your manipulation that took out liquidity. You're in a distribution phase, right? And this is a type 2, right, of this area as well. You're reconfirming your accumulation box low as support. Literally everything is, every single checklist is being ticked, right? You already hit your T1. So your next target would be, I'll just target this, right? So you hit the bat, deep bat's going to take you just shy of your final bat target, up towards this at least. So this is why I'm in PAL. Risk to reward wise and in terms of narrative, AI coins, so on and so forth. I just like my odds on this one. That's it. It's a calculated gamble, right? Everything we do with trading at the end of the day is calculated gambles. But let me go and check back to the chat real quick. I don't have any indicators right now, brother. I'm not sure which one you're talking about, but I've got no indicators on my chart. XMR, yes, good shout. Okay, so I've talked to a few of you about XMR before, right? So here's my take on XMR, and why I've got a really nice spot back of this. This is, right, so this is what I like to call harmonics based on structure, okay? This isn't particularly based off like, last wave cycle or anything like this. If you were to look at XMR based on structure, right, so obviously price started down at the lows, 0.01 cents, right, at X. You take the XA, right, to the current peak, you take the B, right? X is not a perfect 618 at the end of the day, we know it's not. But again, remember, the way I do harmonics isn't like a purist way, like a textbook Scott Carney method, right? I just sort of utilize this for my own trading style. That 618, the main thing is, has it been validated, right? And if you take a look at this on the weekly, on the daily, the answer is yes, right? Your 618 came in, wick below, I don't care. That's a liquidity grab. The main thing is following that, look, support, right? Support, and then flip to resistance, distributed around the 618 before actually going to your low. So the 618 very much was the price action around which the actual key price was the key level, around which the key price action happened. Right, so for me, you have a XAB, a B is the 618. Your C point, 0.44 retracement, and your D point is a 1.618, a 0.786. That 1.618 and 786 line up perfectly, right? That's your macro Gartley 786 plus 618. So that's why I've got this, right? So of course now, if you're talking pure harmonics, this is not how you do it, right? You're meant to go from wave structure to wave structure, but I'm not using this as a pure harmonic structure. I'm using this to justify and explain price action. What we've had since the lows is, and in a way, this is wave structure, right? It just depends. You're just not taking wave structure from here. You're just taking the wave structure from the start. Your macro wave structure is just went to X, you went to A, you went to B, you went to C, and then you went to D, right? So for me, this is completely valid. You hit that. Right, your macro is 786 plus 1.618. You hit that key level, which is also a key support resistance level, right? I can turn buy-seller zones on. It's going to be key levels based on buy-seller zones as well. But you've hit that key level, and then after those key level, what you've done is you put in a accumulation zone right there, right? So from 2022 through to end of 2024 for 2 years, sideways, right? What does this remind you of? Your answer should be Link, right? This is what Link did before it absolutely ran. Right, you have a 2-year accumulation zone with valid rates of range low, so on and so forth. You have a very valid range high right over here, right? There's your accumulation zone, and then you got your breakout, and then you got your retest of the accumulation zone, right? So I started talking about this again from my my harmonic setup video, right? That's when I started talking about this because I noticed this, and so anytime we hit that deep pullback, locally speaking, over here, I just started building some position, and then I sized up once again when you flip that range highs into support, and now you're grinding up, right? So now you're literally out of the accumulation range on XMR. The only way this would be invalidated is if you just went back and completely retested that range's resistance again. Otherwise, I'd be looking for moves up on this, right? There's your C, there's your A, and who knows, right? Privacy coins really pick up. Maybe this makes new highs. Never say never, but this is why I was talking about this a lot, especially in the harmonic setup video, right? So September, all through September, October of last year, I was talking about this a lot. That's the reason, right? I think the structure for this is absolutely beautiful. So all I'm doing now is just absolutely just holding my position, and that is it for XMR, bro. Just hold it. Hopefully, we go and take out C, we go and take out A, so on and so forth, right? But I have a feeling, if privacy does ever come back, this thing's gonna absolutely run. And then you consider all the things this has had, right? This has been banned, this has been segregated, right? Just because of it, as a privacy token, it's very good. No one's gonna be able to monitor. So if it does actually now get a proper use case at any point, right? And this is I think it's gonna go. You can't fade structure. Like I said, charts are gonna tell you way before bullish news or anything like that comes in. And this, for me, someone's been accumulating. Do you know what I mean? Someone's definitely been accumulating. So that's my thoughts on XMR. So I'm not selling my bag anytime soon. I am basically fully positioned for this. I don't need to add any position size either. So just hold it now. This does move fast, I know, right? But I didn't enter this as like a just straight up trade for now, right? This is more of an investment for now. I think so, yeah. Poloniex has from 1 cent, bro. I remember putting, I would have put, for every single ticker I put on, I put on every chart and then look at what's got most data. So I think, yeah, Poloniex has the most data right now for XMR. So you also asked me to look at LTC for you, bro, didn't you? So let's look at LTC. Litecoin. Beautiful structure. So the reason I was talking about this before was this. Right, so this, I was talking about this in my harmonic setup video. Now I forget whether this actually had a wave structure, but the main reason I was interested is macro fib retracement, right? You hit again a deep value, 87886s, right? 87886s have been hit. Deep value has been achieved. After deep value got achieved, you also maintain your trend line. That's the sole reason I gave the LTC entry back in September. I'm still in that entry, by the way, for LTC. So yeah, send this higher, and then you've reclaimed your next deep value level 764, 786 into support, right? And now you're trying to get over viewers liquidity rate. So one thing, you're probably gonna SIP the 618 originally, do some sort of chop. Ultimately, you're looking for 618 to base your support, and then to run towards this target here on LTC, $200 plus, 242 to 273 is what I'll be targeting next, somewhere around here. If you wanted a more local trade on this now, right, literally based even just off fibs, what you'd be doing is again waiting for the daily to close, and then this sort of area in the future, looking for a pullback here, and then some sort of reclaim this as support, basically to try and get a long to the upside. That's it on Litecoin. STRK. Okay, let's take a look at STRK. I don't even know. Oh Jesus, one sec. Yeah, the trading view's glitching out again. There we go. Right. STRK USDT. Dog shit. This is a dead chart. One sec. I mean, it's like, yeah, sure. If you wanna, I suppose you've raided the lows, that's for sure. But you definitely have, in terms of risk to reward, sure, like you might have a great trade here, but in terms of charts with actual life and where money's actually going, I wouldn't even bother with this, to be honest, brother. But in terms of a trade setup, let's take a look, right? So first things first, on the yearly, there's your key levels, right? 46 cents obviously has to be reclaimed, that's obvious. 6 months, we have this. There we go. Big resistance above you, basically. 4 months different, 3 months. Yeah, this is nasty work. Weekly. In terms of an entry, you can keep it very simple. But let's say you decide to buy this here, bro. You're gonna go in with like 20-30% in my opinion, right? Just remember the things I was telling you guys last stream or previous streams even. You wouldn't go all in here at this point because this thing has no signs of life. The only reason I put this down is because you requested it. My humble opinion would be forget about StockNet, buy something else that actually has signs of life. This doesn't have signs of life whatsoever. But if you really wanted to get in, what I'd do is maybe 20-30% allocate here, leave the rest for actual reclaims, okay? There's no point going all in here in my opinion. This chart's too dead. For me, it doesn't. There's no signs of life on this chart, right? So I would ask you, why would you allocate 100% of position size on a chart that has no signs of life? You at least want an initial form of local resistance being flipped to support at the minimum. You don't even have that. Literally every single metric of this is, we're bleeding to death. So if you wanted to trade, it's simple in terms of how to actually manage your risk, but I can't promise this stop's not gonna hit. This doesn't look good. Even if this goes from here, like, so what? You know what I mean? There's coins where you have a way better thesis and a reason to be in. This is nasty. This is absolutely terrible chart. Was this airdrop token, StockNet? Trading like absolutely airdropped, trading like a token that was just airdropped to the masses. Yeah, bro. I've not actually looked at it in terms of diagonals yet, but that looks valid to me, bro. Right. Yeah, that looks good, man. I mean, with they literally said there's no partnership, right? So I do forex, but I don't do it nowhere near as much as I do commodities or stocks or crypto. Um, say right. So for me, say is I've still got still got hopes for the coin project itself, which is the reason it's still in my top 10. But like I said, in terms of charts right now, it's looking ugly, so I wouldn't recommend being like all in on it, right? Especially if it's below where it is. With like with was straight up. They literally said we've got no partnership, so on and so forth on with. So I wouldn't be in with to begin with, right? But to answer your question, brother, it is worth it, right? That's the point. If you're a trader, it's definitely worth it. What most people think is it's only worth it to be in projects that are doing this, right? But at the end of the day, you could have asked the same question, right? You could have asked the same question on say when it was down over here, right? Was it worth it to get into say then, right? In hindsight, of course, yes, it was, but that's the reason I gave the say entry here when I did, because then the structure was down, telling us, okay, you've got a cumulative structure, right? Over here, look, so you have smiley faces, you have M shapes being completed. Yes, the charts still look like the charts still look shit in terms of a massive sell-off. No one seems to be buying. But if you had bought in here when I said to in September, you'd have had a very nice impulse back up, right? To the targets, to the mid of the harmonic, to the targets. Those would have hit. So is it worth getting into this? Yes, as a trader, yes, right? So we've got to differentiate. Do you ask that question as an investor, or do you ask that question as a trader? Are you here to hold projects long term because you believe in the crypto project as a space, right? Or are you here to flip these, make money, trade in and out? If you're here to flip these, make money, you should definitely be thinking that these are areas worth it, right? Because deep values, 886s, type 2 returns of harmonics, in terms of technical analysis, this is where most people capitulate. This is where retail, this is where people who don't know how to trade get out the market. They think it's all over, but this is where your highest risk to reward trades are. So it's definitely worth it because you can size up here, you can get into a project here, add minimum losses to yourself. After this went up, people were asking me for a say long at A. Right, and hopefully some of you remember this. I was telling you guys in September, I'm gonna be getting entry requests up all the way up once these are played out. And just like I was saying, in November, December time, people were asking me, well, what's a good entry for say when we were here? But I was telling you guys, distinctly remember this, right? XABCD pattern, not this one. Where's it gone? One sec. Here, not this one either. Have I deleted it? I'm sure I haven't. One sec. It's gonna be here somewhere. Harmonics. Where the hell have I put it? One second. Just wanted to show what I mean. Okay, well I'll just redo this. So what you had was you had a shark, right? If you look on say, from somewhere like over here, if I remember correctly, what you had on say was a shark, right? So the 886 for the said shark, so on and so forth. You had a shark on say, and even if you're taking it from here, that's a shark. That is a very very nice shark on say, right? And people were asking me, is it a good time to get in here? But I was telling you, like, if you want to get in, like, be my guest, but I'm not going to be getting in. Why? Because then what we had from that shark over here was a 5.0, right? A 0.5 of the 5.0 was right over here. You rated your 5.0, but ultimately you distributed around the 5.0 level. Everyone wanted to get in here, but was it worth getting in here? No, it was worth getting in a short. Right, and this is just market psychology, right? You get in when everyone's bullish, when the timeline's bullish, when everyone's saying we're gonna go higher. I understand it's much easier to get in. Down here, when everyone's doom and gloom, people are calling for cycle tops. It's really hard to get in. It's easy to question, is it worth it? But you got to understand, in terms of risk to reward, in terms of trading, these are the areas you're interested in. Now, of course, like I said, currently on something like say, it'd be much better if you wanted to get above there, right? Then it'd be really worth it. You'd be looking to get it back up. So as long as you're below this, right, you're not going to be all in, or you're not really going to be heavy in this. You're going to wait for that trade. But once that happens, this is your logical target again. I promise you, when this happens, many people will fade, right? I will be getting entry requests when this goes back up here again. And that's just market psychology. The streams will be more full. Everyone's going to be more active. The general vibes are going to be better. But the actual best entries, the time to take the most risk, is not going to be up here. It's going to be down over here, right? So just thought I'd give you an example, brother. It's going to be like that for every single coin, right? It's going to be like that for every single coin. AVAX was an example. This was the one I was talking about the most. I was telling people, look, you know, we have that, you know, retest of the 886. AVAX is good to get into. I will be getting AVAX requests high, right? AVAX pumped. People kept asking me, when's a good time to get into AVAX? When's a good time to get into AVAX up here? But I can't give you an entry if I personally wouldn't enter. I'm not entering AVAX up there, right? But again, these are areas where everything just lines up and makes sense. It doesn't matter what the sentiment is. It doesn't matter what your favorite influencer is saying or what this person's saying, what that person's saying. Just have your own system. If your own system tells you, but why would I not buy here? Then why wouldn't you just have a condition and bid some, you know? Because you can ask the same thing about AVAX. You can ask the same thing about, you know, you can ask the same thing about mini coins. Is it worth it? Like, are you talking as an investor or are you talking as a trader? Right? As an investor, if you're looking for long-term plays, obviously I think many coins will be worth it, right? If you believe in the project. As a trader as well, yes, it's going to be worth it, right? Because you're at areas now where you have massive upside potential and your imbalances, your draws on liquidity to the downsides are getting less and less and less. You have less and less reasons to go down. I'm not saying like, you know, we can't chop down some more, but the lower we go, the better of an entry opportunity it is at the end of the day. Do you know what I mean? As the actual trade itself. Yeah, that's the 5-0, brother. Yeah, that's the one I was talking about. Just put on my chart. Okay, so that's that. I will look at one final coin and I'm gonna dip, guys, because I've got plans for this afternoon. So I'm gonna look at Uni for you guys. Let's take a look at this, and then I'm gonna dip. Uni, beautiful. Again, is it worth it? Right? Yeah, many things crashed, but this is worth it in terms of wave structure. Look, 886 is hit on Uni. 0.5, 2.0 has hits on Uni. Your 2023 12-month levels have been flipped to support. You're currently at resistance, so I would not enter Uni here. Yearly resistance. You either enter on this flip, in which case you actually get nice accumulative structure going on in this area, right? So waiting for this flip of Uni, a flip of on the lower time frame, $10.75, right? And $10.69. If you're thinking more higher time frame, then just think of it as a zone. You just want to flip this zone into support, right? And then if you flip that again, your Uni range is going to take you back up towards the external targets, basically. That's going to be your range, right? But right now you're resistance. It was a beautiful time to enter there. Lower high that led to the lower low taken out, right? That was a beautiful time to enter, especially after this wick came in. But right now you're at resistance, so I'll just wait for the flip, bros. For Uni, just wait for that flip. Minimum $10 and 0.75 cents flip to support for you to get in. Otherwise, you might actually be better off if you do, let's say, raid into this level, right? Let's say you get one more spike up and you raid, and then you do something like this. You'll actually be better off taking a scalp short on this, scalp to swing mindset, head short on this back to the downside. But if you flip this into support, then you're taking the long up towards this on the lower time frame. $10.69. Ah, you play the Gartley as well, right? Yeah, yeah, that's clean, bro. Yeah, Gartley, you have a bat, like I said, and then you have a 5-0 as well. A lot of harmonics here, right? 886 bat is there, your 5-0s over there. But you could take that as a Gartley as well, sure. Yeah, it's just a lot of confluence in this area, basically, just an absolute shit ton of confluence in this area. But yeah, that's Uni. So like I said, guys, I've got plans today, so I'm gonna end this stream here. I know it's shorter than usual, and I've not gone over many coins, but just wanted to touch on like the important ones, right? One thing I will put on you guys' radar is Mumu, right? So me and one of my friends are looking at this one. Actually, let me touch on two things real quick. First things first, Sol against ETH. I wanted to touch on this chart real quick. I noticed on the other day, what we had on Sol against ETH is a very deep crab, okay? 86 to 1.618, and currently you're putting distributive structure in, which makes me think that if we do get a pullback, Solana's going to dump harder than Ethereum will. T1 zone is over here, T2 zone is over there, right? However, if you do flip this into support and you're deciding whether to get in between Solana or ETH, you're going to be in Solana, Okay, but as long as you're below this, you're currently at moments where it actually makes sense to not be all in on Solana. Okay, don't fade Ethereum at these levels, because Sol against ETH is telling you Solana looks ready to break down against ETH, currently speaking. Until proven otherwise, you've hit your 1.618, you've hit your distributive structure. You're not going to be surprised if you do get some sort of pullback on this, at least to the T1 zone, right down towards less than 0.058. But yeah, I just wanted to point this chart out for you guys, right? Because obviously the big question right now is, do I go all in on Sol? Do I go all in on ETH? Do I have a mix of both? At current areas, it makes sense to prioritize ETH over Sol. Based on this chart, I'm talking with just pure logic, not emotions, anything like this. It makes sense to prioritize ETH over Sol. How would you stop prioritizing ETH over Sol and prioritize Sol over ETH again? Very simple. If you flip that into support, just go back to prioritizing Sol over ETH. Okay, but this is a nice one to talk about here. I noticed it last week. Yeah, I can't believe I hadn't actually noticed it before. I was on my one-on-one session with Tip, and then we were looking at this, and I was like, oh shit, wait, hang on, we've got a really nice 1.618 here. So yeah, distributive structure as well. So do watch out for this one. And the other one I want to talk about real quick is Mumu. Okay, so I know, you know, this thing's absolutely died, but now, again, to go back to your point before, Niraj, bro, is it worth it? Like, no, in terms of market structure, in terms of the chart, is it worth it? Hell no, right? But in terms of where you can just buy a bag and forget about it, is it worth it? Hell yes. Right? Look what you've done. You've raided your entire range low, right? And that range low is also the, if you were to, for example, right, if you were to take a look at the original range here, the reason I've marked it like this, right? This range low is, if you take the volume profile for the original range, it's the standard deviation 2, standard deviation 3 value area low that's been raided. The standard deviation 1 value area high has been flipped to support as we speak, right? Now the macro, if you take the volume profile from the macro low to the macro high, you're using the standard deviation 1 value area low of that as resistance, right? So basically, you have very, very key levels right now. And then what I've done is put the fixed range volume profile for the move down so far, and then the macro fixed range volume profile, right? So until you get above 0.1069, you're in building a bag mode on Mumu, if you are interested in taking this anyway. You don't have to get into this, right? I'm not saying get into Mumu, you're going to miss out generational wealth. You don't have to get into this if you don't want to. It might not play out. But even though Mumu did rug, right, someone very trustworthy, and this is from sources I trust, so, you know, someone very big who knows what they're doing is currently CTOing Mumu. All the piece of shit calls are out, right? So anyone that has bad intentions, only in it for the actual quick flip of the money, all the supply's been dumped, right? So if the CTO goes well, this thing could have a very, very nice recovery, right? So these are lows. These are very, very low areas, right? So for Mumu, with the areas you currently are, right, what's the first way? If you wanted to actually have a tight stop loss, how would you trade this, right? You would trade it as such, right? If you wanted to get in where we currently are, below the macro point of control, not the macro, so below this point of control, I wouldn't want to hold it, right? So around 15 to 16% risk, let's say, something around there. 15 to 20% risk, sorry. Anywhere between that, you know, below this point of control, basically, you don't want to be holding this. Right, but even just to, I'm not even saying let's go all the way back up towards new highs, right? Even just to your previous range consolidation lows, right, slash highs, that's going to be a 329% move up from where we currently are, right? So Mumu's are areas where, again, if you look at this in terms of market sentiment and emotions, it's not going to be worth it. It looks shit. But if you look at this logically in terms of a trade, it's more than worth it, right? So yeah, this is one I want to put on your guys' radar, right? You don't have to go all in straight away either. You can if you want, right? I've just got a bag in this that I'm okay with, just completely like going to zero if it's okay. So I've just got a 5-figure bag in it. If it goes down, it goes down. I don't care, right? It's what it is. But ultimately, you know, if you do flip this into support exo, I'll be just increasing my size some more, and then that just increases your probability of going back here. Be flipping macro point of control back into support. What was on support, back into support, so on and so forth, right? I expect you could chop here for some time, but as long as the lows aren't breached, you're fine. If you then lose that point of control, ultimately if the lows gets breached, you don't want to be in this anyway, right? But at the areas of the chart where you currently are, this makes complete sense to be in, right? So again, I got in at that 382 2.618. So after I saw the 2.618 get hit, and then the high low come in, I got in at the high low, right? But yeah, just wanted to put this one in your guys' radar. This one looks promising. In terms of a trade, is it worth it? I'd say yes, right? So that's Mumu. So sold to $0. Yeah, no, I appreciate you guys for being here, man. Sorry I can't stream for long today, but yeah, see you on Friday. See you on Friday. Right, bro. But yeah, anyways, guys, I'll end the recording here. Thank you guys for being in the stream. I'm back to normal now. I'm gonna have a week towards the end of Feb where I'm gonna be slightly on and off because the final rites for my grandfather's gonna be taking place. But apart from that, you know, I'm back to normal. So if any of you are interested in the way I trade, just reach out to me for my one-on-ones. Otherwise, catch me in my streams and my YouTube videos. Ping me in chat if you need any help, and I'll talk to you guys soon. Yeah.